Market reporter Kate Rooney is here at Post 9. Lockup expirations always make some a little jittery. Is there anything new about this round?
So we've got Zoom and Pinterest next week. I think Uber is really the one people are watching, by far the biggest. About 80% of its stock is currently locked up. That's in November, the lockup expires. So it kind of changes that supply-demand dynamic. People are saying, yeah, we've seen the stock struggle already. If VCs come in and decide they sell, which analysts are saying they most likely will, they need an exit. It's been 10 years in this case. You also have early employees. So if you've been at Uber for, say, 8-10 years, you're an engineer, you're looking to diversify. You don't want to have all of your net worth tied up in one stock, let alone a stock that hasn't done that well.
Although, I mean, you could argue the psychology is I'm going to wait for it to recover a certain level and then sell.
That's
right?
true. And you don't need to sell necessarily. It would just be an issue if everybody ends up selling at the same time. And there are cases where you would want to hold on to that. But I think there is a need for early employees to diversify. If they're holding this much Uber stock, and if you're an engineer, for example, and you said, all right, I'm going to skip out. I'm not going to Google or Amazon. I'm going to go to this high-flying startup and trade that salary for equity. They're kind of watching the shot clock going, this is my exit.
I wonder how high the stakes are for some of these lockups and how the stocks trade in light of them, given the direct listings discussion that's happening in Silicon Valley right now.
Very true. Startups that are watching this go on, they've been watching Uber and Lyft and all of these performances this year. If this ends up pressuring the stocks, like analysts say it will, it could add to that argument for direct listing, which Bill Gurley and others have argued for. So I think CFOs or others would either delay an IPO or say, okay, maybe direct listing is the way to go. You get that volatility up front. You don't have to wait 6 or 3 months to deal with it.
What about chain reactions, unintended consequences, sentiment that could shift if you see selling of these IPOs because of the lockup, VCs maybe taking in then less money than they expected? Does that affect what gets funded or doesn't get funded next?
It could affect private markets, and I think public market investors also might see that selling and think, oh, the smart money is selling. Why am I here holding Uber? And that's another dynamic that could happen. And the reasons they're selling isn't necessarily because the stock's not doing well or they don't see long-term value in Uber. Their job is really not to be public market investors. Their job is to bring that company to IPO and then go on and look for the next new high-flying idea in Silicon Valley.
That's what we're all looking for, too.